Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 1st, 2024, and we're diving into PPL Corporation's latest earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss PPL's third quarter 2024 earnings report with you and our viewers.
Let's start with a brief introduction to PPL. Headquartered in Allentown, Pennsylvania, PPL is a leading U.S. energy company providing electricity and natural gas to over 3.5 million customers. They've just released their third quarter 2024 earnings. John, what can we expect from today's discussion?
We'll cover PPL's financial performance, strategic initiatives, and future outlook. We'll also discuss statements from the company's leadership and what these results mean for investors.
Revenue and profitability overview. Let's start with the top line. PPL reported a net income of $214 million for the third quarter of 2024, translating to 29 cents per share. This is a slight decrease from last year's $230 million, or 31 cents per share. John, can you elaborate on these figures?
Certainly. While the reported earnings per share saw a slight decline, the ongoing earnings per share, which excludes special items, were 42 cents, just a cent lower than last year's 43 cents. This indicates that PPL's core operations remain strong despite the reported earnings dip.
And how does the year-to-date performance look?
For the first 9 months of 2024, PPL's net income was $711 million, or 96 cents per share, up from $627 million, or 85 cents per share, in the same period last year. This 13% increase highlights the company's solid performance over the year.
Operational efficiencies and future outlook. John, PPL has narrowed its ongoing earnings forecast range for 2024 to $1.67 to 1.73 cents per share. What does this tell us about their future outlook?
This adjustment reflects PPL's confidence in their ongoing operations and strategic initiatives. The company has increased the midpoint of their forecast, which is a positive signal to investors. Additionally, they reaffirmed their commitment to a 6% 8% annual earnings and dividend growth through at least 2027.
That's impressive. What are some of the key initiatives driving this confidence?
PPL is investing over $3 billion in infrastructure improvements to enhance grid resilience and support a cleaner energy future. They're also targeting significant operational and maintenance savings, aiming for at least $175 million by 2026, with $120 million to $130 million expected by the end of 2024.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did PPL's different segments fare in the third quarter?
The Kentucky regulated segment reported earnings of 23 cents per share, slightly down from 24 cents last year, primarily due to adjustments in environmental cost recovery revenues. The Pennsylvania regulated segment saw a slight increase to 19 cents per share, driven by higher operating costs. Meanwhile, the Rhode Island regulated segment improved to 2 cents per share, benefiting from lower property taxes.
And what about their strategic initiatives, particularly the integration of Rhode Island Energy?
PPL successfully completed the integration of Rhode Island Energy, exiting transition service agreements with National Grid. This smooth transition was a priority for PPL, ensuring minimal impact on customers and aligning with their strategic goals.
Risks and challenges. John, what are some of the risks and challenges PPL is facing?
One of the main challenges is the increased interest expense, which has impacted their corporate and other segments. Additionally, special items, primarily related to the integration of Rhode Island Energy, amounted to $96 million in the third quarter. PPL also faces competitive pressures and ongoing regulatory challenges, which are common in the utility sector.
How is PPL addressing these challenges?
PPL is focusing on operational efficiencies and strategic investments to mitigate these risks. Their commitment to infrastructure improvements and cost management is crucial in navigating these challenges effectively.
Key takeaways. In summary, PPL has demonstrated a solid performance in the third quarter of 2024, with ongoing earnings per share of 42 cents and a strong commitment to future growth. Their strategic investments and operational efficiencies position them well for the coming years.
Absolutely. PPL's focus on infrastructure and cost management, along with their commitment to dividend growth, makes them an attractive option for investors looking for stability and growth in the utility sector.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on PPL's performance in the comments below.